Smith, hi.
Hi, sir. We'll start the call in a few minutes.
Sure, sure.
Can we start, sir?
Yeah, absolutely.
Yeah. Thank you very much. Good afternoon, everyone. My name is Abhishek Jain. I am Head of Research and Director Institution Equity, Arihant Capital. This is the third day of Bharat Connect conference. I welcome you all to the conference call of Fusion Microfinance. Today, from the management side, we have Mr. Sanjay Ghariali, CEO, Mr. Amandeep Singh, Interim CEO, Mr. Ayush Saraswat, Head Investor Relationship. And also we have Mr. Smith Shah also from the IR team. Without taking much more time, I'm handing over to the management. But before I hand over to the management, I lay out the flow of the event. We can have a small presentation or small update about the by the management, and then we'll meet to the Q&A round. And any participants who would like to ask the question can raise their hand or put them in the chat box. There are few questions have been asked, sent by the few analysts also, which for some reason would were not being able to participate. Without taking much more time, I am handing over to the management side. Thank you very much, sir.
Yeah, thank you so much, Abhishek. And thanks, everybody, for being part of this call. Um, a big good afternoon and welcome to everyone. So between Aman, Ayush, and me, I think what the next 5-7 minutes, I will just give a summary of how the last 5-6 months have been and what are the key things that we are working on. And then I think most of the session, we are happy to keep open-ended for your queries and any specific questions you have or any in-depth understanding that you require. So let me start first by talking about what's the response. So you all know that we set up our guardrails on the credit side about 6-9 months back, which were much stronger than 9 months back, which were much stronger than the industry. Initially, there was a impact on disbursements, but I think as and when we improved our operational flow as well as the processes, disbursement started growing. Initially, we had dropped to an approval rate about 15%. Right now, we are close to 30%. So I think the patience and the resilience that we have shown, and rather than dropping the guardrail, rather than dropping the elevated guardrails, I think the persistence that we kept, that has paid off. What also that has done is that that's sharply reduced our over leverage or customers greater than three lenders. If you remember, we were much higher than the industry. So industry used to be at about 19%. We were at 31%. This is March 24, about 1.5 years back. If you look at the same figure in March 25, the number of lenders greater than four for us had dropped to close to 17%, while the industry from 19% came down to 15%. And finally, from 17, so the industry dropped from 15 to 10, and we moved eventually to about 13% on the current book. So, in terms of the number of lenders greater than three, there's a significant reduction because of the new book essentially that we have acquired. We also took precaution that the new book will have, while three lenders are being allowed, the new book had about 80% only two lenders, and just about 20% was three lenders allowed. Disbursement inched up quarter on quarter. While last year, while quarter three, we had dropped to about 250 crores a month disbursement. Quarter one, we came to about 330 crores. And we shared with you that July we crossed 400 crores, and August and September have been very, very promising. So there's a sequential growth of 8 to 9, 7 to 8% that we have seen month on month over the previous month. Uh, so the disbursements are now coming back, and we are seeing traction on disbursement. The second is that on the collection efficiency, because of strict guardrails, because of better discipline on the ground, the collection efficiency, also the way the market measures, which is on the uh, uh, current bucket, what is the net flow forward at a POS level, that had that quarter four ending had improved to 0.57%. And the way to calculate collection efficiency from that is 100 minus 0.57, so 99.43, which in quarter one of this year improved to 0.54. So 100 minus 0.54 is 99.45. And while we are talking, it is further improved by about 10 to 15 basis points in the last 2 to 3 months. So just to tell you, August has been the best ever collection efficiency for us in terms of the flow forward rate. Uh, and significant improvement that we continue to see on disbursements in September as well. On the now there was a book that we had written off in the last 1.5 years. Plus there's a stage three which you see close to about 350 crores. So about 2,400 crores was what we had written off, either written off in the last 1.5 years or which was lying in 90 plus. There are teams we had put behind this, from a core collections team, in-house, agency, and some amount of business teams moving into collections. Between these three, in quarter one, we had finally reached a figure of about 30 crore of cash collection, which also includes write back. This number is increasing constantly month on month. So while we talk right now, there's a significant growth over this number in quarter two, and we continue to see success coming from this book. Our sense is that about 9 to 12 months from here, we would want to continue with this strategy, because this is a significant book, and we have identified about 600 to 700 crores out of this 2,400, which has got payment track record outside. Finally, on the lenders, we've been, other than quarter three of last year, we've seen significant disbursements quarter on quarter. We have been receiving close to 350 to 400 crores of fresh disbursements. These are essentially happened between private banks, MNCs, few PSU banks, and very few NBFCs. But NBFCs are very few, but most of it is between banks, private MNC, and PSU. So we see a significant confidence developing in the lenders, and some of the lenders who had not participated in disbursement in quarter one have come back in quarter two, and we already are have received sanctions from few lenders for quarter three as well. So finally, on the team side, I think what we have been able to do is that the core team we have divided into, we are very strongly built around assurance functions and the business functions. So on assurance functions, there are people who are responsible for their core functions. Previously, how it used to work was that 3, 4 functions were the responsibility of one individual, and we thought that it was unfair and too much pressure on that one person. So we have separated, especially the assurance functions. So fraud control, for example, becomes a separate function, and there's a senior person who manages this. There's an head of internal audit. There's a chief compliance officer, which previously chief compliance officer, investor desk, legal uh, used to be with the same person. Now these are all separated. So Ayush, for example, here on the call manages the investor relations and uh, the treasury function. There's a separate person who we have taken for credit, and there's a separate chief compliance officer and a company secretary. Other than this, there are obviously the business, IT, and HR functions, but essentially we have made people responsible for their individual functions so that they go deep, especially in the assurance functions, and we stay protected while we are building the business again. Finally, as a sum up to this, what I would want to conclude is that while we are seeing a lot of positive sentiment, especially in the last 1.5 months, uh, I think from a guardrail perspective, we will always be a little conservative than the market, but we think that uh, there is enough demand in the market, and in terms of disbursement growing, we see enough traction, even if the guardrails that we set up are tougher or are stronger than the industry. So with that, I'll um make the session open for everybody, and between us, we'll be very happy to take your queries.
Thank you very much, sir, for the questions. There are few questions have been there in the chat box also. Some questions have been there, but I'll start with the people who have raised their hand. Mr. Jitin Agrawal, you can raise your hand and you can ask the question, please.
Oh, hello,
Yes, Jitin,
am
you
I
are
audible?
audible.
Yeah,
Yes,
Jatin.
yes.
Yeah, Jatin. Can hear
Good
you.
afternoon, sir. So
Hi,
actually, I
Jatin.
have three questions. For my first question would be, sir, you recently mentioned that you have an assurance team now in place.
Right, Jatin.
So could you just tell me what is your team size and how is it managed, like micromanaged?
Okay. So Jatin, there are two functions responsible for assurance, other than the chief compliance officer, which is the fraud control management and internal audit. There are close to about 375 to 400 people in these two functions, and a lot of their activity happens on the basis of triggers which get generated. So let's say a customer was to pay an EMI, and we do not, there was a regular paying customer in the X bucket. If we do not get that EMI on the due date, there's a trigger that goes to the customer. Uh, there are customers then who follow up saying that we have paid up the EMI, and that's how we get to know that there's some gap between what was collected and what has been deposited. Other than that, there are triggers around KYC, around any suspicious activity in the system, which between audit and fraud control, they manage. Uh, so the way you should look at it is that at a fraud control, uh, the responsibility of 4 to 5 branches lies with one person on the ground. And this person is on the ground, sits in one of the branches.
Okay, thank you, sir. And sir, how much would you say has the collection efficiency improved since having this assurance team in place?
So I think if you look at the, let's say, look at from a peak, there's at least on the total, uh, from a customer's perspective, we are able to, there are at least in a month about uh, 2000 to 2,500 customers that are actively resolved post the trigger.
Okay, okay. So could I also have the percentage for non-performing asset and which sector currently has the highest non-performing asset percentage?
So NPA, Aman, you want to take that? The GNPA ratio you want, and I think what you're asking for is state level.
Sector-wise, agriculture, MSME. whichever sector contributes to highest
We
non-performing
do,
assets.
so we don't segregate
Uh,
that because this is all MFI.
okay,
But
okay.
Because we have two
uh,
segments, MFI and MSME, and rest we are not calculating it like agriculture, retail, different sectors. We are not calculating ECL. No?
So if you could just give me an aggregate percentage.
Aggregate we have already given the 5.43 in June gross NPA figure, right?
5.43%.
Right.
I think in
Okay.
absolute terms, the total value, Aman,
Is
is what?
383. 383 crores.
Yeah. So the total
380.
NPA book, stage 3, is about 383 crores.
Okay. And my final question would be, so when can we be expecting a profitable quarter, sir?
So we are trying our level best as soon as possible. If you
Okay.
look at the profitability of Q1, you see that there's the total credit. So credit cost is the biggest cost. And you see that while most of the other things are remaining constant, the credit cost is uh, drastically trending downward. So once it's come down from 250 crore to 178 crore, the same trend will continue. And we are targeting as soon as possible. So I'm saying I can't share with you exact when, but I think if you run that model forward, you will understand that how close we are to getting to profitability.
Okay, sir. Thank you, sir, and all the best, sir.
Yeah, thank you so much, Jatin.
Thank you. The second question is from Mr. Anil Tulsiram. Anil, you can ask the question, please.
Yeah, thanks a lot for the opportunity. I have two questions on MicroLab. First question is, as per the presentations, our ticket size for MicroLab is between 1 to 15 lakhs. But when I see the average ticket size is around 4.5 lakhs. So are we planning to focus on the higher ticket size going forward, or what's the strategy?
So, right. Most of the business that we do, or actually last 15, 16 months, whatever business we have done is secured. And we don't do any unsecured in MSME. And we do only till about a year or so back, we were doing multiple properties, but right now we are doing only self-occupied residential and commercial property with high marketability. We're not taking any cash flow calls on the customer. There's no deviation on the cash flow. We eventually, so while I'm talking, this ticket size on a disbursement is close to about 6.5 to 7 lakhs. And we want to take this to about between 8 to 10 lakhs. So the sweet spot for us is between 8 to 10. And I think between 8 to 15 lakhs is where we would want to focus on.
Okay, and sir, the last question is a both a clarificatory, like Equitas and Five Stars are already exiting the less than 3 lakh MicroLab segment. So do we plan to do this less than 3 lakh MicroLab, or we want to focus only on the 8 to 15 lakhs as you said?
Yeah, we want to focus on 8 to 15. And like I said, we are doing only secured, and we don't take any. So see, the way market does LAP is, or the way market does mortgage is, everybody has their own strength. Now, what, and there are people who think the companies that you're referring to, there are also companies that uh, take a call on cash flows but operate at low LTVs, and they think that low LTV is a surrogate for or is a mitigant to cash flow. And that because there is significant LTV protection, they'll be able to take the property, possession of the property, and there'll be no losses. We do not believe that at this ticket size there makes anything less than 15 lakhs. We don't see any sense of getting into repossession of the property, and that's why we are the clear differentiation between us and the market is that we don't take cash flow calls. We'll be a little higher in terms of LTV, but we will not take call on marketability of the property. So the marketability has to be high. It has to be self-occupied residential and commercial, and zero cash flow calls. So the entire problem in the market right now, which has happened in MicroLab or in MSME, is more around wherever there were over leverages. wherever cash flow was constant or cash flow was stable, those customers have not got impacted at all. So I think the call that we took, which is no cash flow deviation, still okay to take deviation on LTV. I think we will hold that. But at the same time, ticket size, we will move from 8 to 15.
Thank you, sir. And the last question, can you, when the stress in the market lab will peak industry-wide, any insights on that? That's the last question from my side. That's it.
So I think the peak is already over a long time back.
No, in the micro lab, not in the microfinance, micro lab.
I think, see, that's what I'm saying. I think the important thing is that, uh, so see, the future projection is very tough to say. However, when you look at that, which I was explaining to you, if the call that has been taken is on the cash flow and LTV has been taken as a mitigant, I'm saying that whether the industry recovers or doesn't recover, or the industry goes bad or doesn't go bad, I'm saying these are always fringe customers. No, wherever there's a cash flow issue is a fringe customer. Do we all agree on that?
Yeah.
Right? Yeah. So I'm saying even if, let's say, it's a great market, still these customers will get impacted. The probability of getting impacted is much higher. If, let's say, as a mortgage policy we say, or as a micro lab we say, we don't want to enter into cash flow deviations, then I'm saying we will be less impacted by all this. So very tough to say whether the market is whether the delinquency is peaked, not peaked, or a recovery will happen. I think if the companies have not taken a call on cash flow, their portfolios will recover much faster.
Thank you, sir. That's it from my side. Thanks a lot.
Yeah. Thanks, Anilji.
So I'm taking now question from the chat box. What is the online run rate distribution disbursement for August and September? How the things are shaping up for looking for Q3? Also, what is the collection efficiency ratio for current quarter? How the trends are moving?
Yeah, so Akhilesh, I think, has asked the question. So we cannot share the run rate disbursement for August and September, but I can give you that assurance. You know our number for July, 400 crores. We have already published that. The numbers that we are seeing for August and now September, there's huge amount of confidence and solid traction that is happening both in August as well as September, since September is almost just 7-8 days left. There is very good traction we are seeing, and I have already shared with you the growth is at least 7 to 8% over the previous month. In terms of the portfolio growth, I see our rundown is close to about 570 crores. We feel that somewhere around end of Q3 or beginning of Q4, we will see the inflection point. On the tax law, on the DTA, I leave it to Aman. So Aman, there the question is that what is the amount of tax loss assets on DTA we have in our books?
We have around DTA of around 390 to 400 crores in our books when we recognize it after removing the going concern point. When we comes in profit 2 or 3 quarters, when we discuss with the auditors that now it is the time that this point can be removed, maybe we will discuss when ALM will get positive while taking the covenant factors. So when all the covenants will be removed and majority of the breaches will be taken out, then we will take the call that going concern impact with the auditor can be removed and DTA can be reversed. So around 390 to 400 crores right now in June we are having the DTA.
And this we can take in one shot the moment we
that we will discuss with the auditor. As per accounting, we have to take in one shot, but
one shot. Take it.
This should be discussed with the auditor and then we will take a call.
Okay, Aman, thank you so much. The other question is from Soumya, which is how do we plan to call the second tranche on the partly paid shares? So that's available till November 26. We are in no hurry. There is fair amount of capital. We have shared with you. So Aman, cash flow situation you want to share with them?
Actually, we are in positive. We have 700, 800 crores cash flow available at any time during the month as well. And we have that 400 crores available. Currently, we are also getting loans from my lender partner. So we are not facing any difficulty in getting the loans and all. So whenever we feel that this money would be called out, then we will take a call to ask that balance money of 400. Right now, we have a time. So now we are not ready to call it now itself, means in the coming quarter.
Yeah. And Aman, there is one question from Manish Mundada, which is GNPA, which you have already said, and net NPA. And how
Gross
do
NPA
you?
right now is around 5.43% as that of June, as you have seen, you can see in investor PPT, and 0.19% is net NPA. So this, I can say that gross NPA will be reduced in the coming quarter, and we will see the asset quality position and take the call for reversing that whatever incremental provision we have already captured in our books of account in terms of management overlay. So we will discuss with the auditor and see that asset quality, whether, as you can see that NPA figures in our books, stage 3 portfolio is quite reduced in this quarter as well, and the coming quarter it will also get shrinked. So whether it is required to keep management overlay in our books, so this is the point of discussion with the auditor, and how much we can reverse it. So that we will take a call as at September end, when books and accounts will get closed and we will get the correct picture of how much portfolio remains in stage 3, so that we can take a call. We have a management overlay that we can take a call of reversal if required.
So, Aman, there is one more question from Manish Mundada. What is your current capital adequacy ratio and PCR? And do you need
Provision coverage already shown in the slide that we have more than 100% coverage over provision coverage ratio, and capital adequacy is 29.52% as on June.
And the
So
final question from Manish is that do you need to raise additional capital in the near term other than
we have
this
already given
400
the
crore?
answer, no? Capital, whether it is required. So currently we are getting loans and from multiple sources like lenders and other NCD and all. So whenever we seems that it is the right time to call the money, then we can call that.
Sure. Yeah, Manish, hopefully we have answered your queries.
What is the current capital ratio? What is the purpose of? Can I take the questions from the investors which you have sent me directly, sir?
Yeah, please.
So the first question has been said, sir. What is our target credit cost for the year, sir? If you can talk about the same, sir.
Sorry, can you just, Abhishek, can you just?
What is your outlook on the credit cost and how you see credit cost by end of this financial year?
So see, there are two things to it. One, if you see, we have already we have shared the entire provisioning model with you, and looking at that, I can't tell you I can't project the exact credit cost, but I have given you the constituents of the credit cost and how the provisioning is done and the flow rates. So it is very simple to figure out what the credit cost will be. However, for the sake of brevity, I think we can put on record that the trend that you see from Q4 to Q1, which is credit cost moving from close to 250 crore to 170 crore, the same trend in terms of reduction will continue till end of the year. On a stable basis next year, the way you should look at it is that about 0.5% is our X bucket net flow forward, which means that 100 minus 0.5, that's 99.5 is at a pause level. Current bucket, what we are able to retain as a non-delinquent customer. So 0.5 that flows forward into 12 or 0.4 into 12 is about 4.8%. About 50% of it we will be able to resolve. So roughly about 2.5 to 3%, sub 3% is the credit cost on an ongoing basis next year onwards.
Future that it will be sub 3%, but
Yeah.
So average market trend will be the same at that time also. So it will be between 2.75 to 3 or 2.5 to 3. We are planning that way.
Yeah.
On a stable basis.
Okay. Thanks, Aman.
So, sir, what among the segments we have microfinance, vehicle financing, and other lending vertical, which segment is expected to lead the growth in FY26 and going forward?
So simply, I think the growth is going to come from, see, from the current level, the growth will also come from MFI, but that's because we are sitting on a very low base. However, going forward for the next 2 to 3 years, if you see the percentage of contribution coming from MSME, which is right now just about 7-8%, you will see that significantly going up. So if that you mean growth in terms of contribution on the overall book, MSME will obviously grow faster than MFI. But from the current level, even MFI will grow because the current level was, let's say, Q1 was a really subdued number, about 950 crores for the quarter. So from there, everything will grow. But like on a sustainable basis, MSME will grow, contribution will grow faster than MFI.
Okay. So have you seen any impact of recent flood on our collections or disbursement?
So, two, three things. One, so there are two parts, four regions where floods were impacted. UP and Bihar first. Now, UP and Bihar are, this is not like a flood situation. It happens every time during this period. So everybody is aware. People are more prepared. They know exactly how to encounter this. Customers, our employees, branches, everybody. So actually, UP and BRR collection efficiency in August was the highest ever. Our overall collection efficiency in August was the highest in the last 9 to 12 months. The two locations which were impacted were Uttarakhand and Punjab. Uttarakhand, we hardly do any work, very small. And most of the hilly areas in Uttarakhand, we are not present. Punjab, which is the other market which got impacted, our presence is very small and we are not so penetrated in Punjab. If you see the parts of Punjab which got, let's say, excess inundation or excess, what we term as floods, were very deep markets. We are not present in those markets at all. But there is nothing consequential in any of the markets because of floods.
Sir, there's a question has been asked. So what is the gross NPA and net NPA trends you are expecting? Are you seeing an improvement in this quarter?
So this, Aman answered this. He
Yeah.
explained the current and he said that these are trending, they are drastically trending downwards. And he
Okay.
explained that the standard uh, stage 3 and the overall 90 plus itself is drastically coming down as a percentage of overall book.
Yeah,
Do you see borrowing cost to? Yes, Aman,
I
sir,
can
please.
add one point that Sanjay told. Like we are having a management overlay of around 60 crores, which is sitting in stage 3 and 2. So majorly in stage 3. So as currently we are having a gross NPA of 5.4. So might be net NPA will get increased if we reduce that coverage, but gross NPA drastically will get reduced in the coming quarter as the portfolio line is the portfolio of stage 3 gets shrinked due to our collection efficiency increased. So that way NPA will come below 5% as not I will not give the right numbers, but it will be below 5% in the coming quarter. And net NPA position may get slightly increased due to reduction in the provision if required in terms of management overlay. If we reverse that management overlay, then might be some NPA will get increased, but it is not of a major hitch for a company. Because coverage ratio will be more than 5% in terms. Right now it is 97% on stage 3. On 383 crore portfolio, we have already covered 370 crores provisions. So there is hardly 13 crores left. So might be we will reduce that coverage in the coming quarter.
So you're
Are we
saying,
looking?
Aman,
Because it is more
gross
than the
NPA,
industry trajectory.
yeah, gross NPA will further go down and net NPA will technically become little stable.
Yeah. So are we looking into entering into new markets or geography once things will stabilize? Or now the things are looking much better?
So see, we are already in MFI, we are already present in 22 states, but we have identified few markets, Assam and Andhra, for example. where we will add more branches. But otherwise, we will go deep in our existing geographies where we are already present. So there are just two states which we have put on reduce. That's Orissa and Gujarat. Other than this, we will grow deep in our existing markets. Most of the markets, there is no need to add additional branches. But yeah, these like these two, three markets that I explained, we will be adding new branches.
We have Vatsal Shah. Vatsal, you can ask the question, please.
Yeah, thank you. Hi, team. So, firstly, just wanted a clarification on the incremental credit cost. So, the 2.5% you mentioned will be incremental credit cost, or will it be for the full year?
Okay, so your other question, I'm just noting down, so I'll answer them together, Vatsal, if that's okay.
Okay. Yeah, that's fine. So, other questions are the PAR 30 to 90, which is the stage 2 bucket. So, it is around 2.5%, if I'm not wrong. So, versus the industry, it is like a quite low percentage in spite of us having 18% or 20 odd percent of customers in the +3 pool of lenders. So, like, what are the reasons for it? Like, are we doing anything differently? And lastly, are you seeing any attrition issues now? Like, the industry was going through the same last year. So, yeah, that's it.
So there are four questions you have asked. Aman will answer question number two. I'll just remind him what the question is. But other, I will. So one, your question was on the what I explained 2.5% or between 2.75 and 3. Was it incremental or annual? It's an annual credit cost for the next year on a stable basis.
Oh, okay.
The second question is that +3 pool, which is about 15 to 16% in our case, that is higher than the industry. Now, I'm saying look at it two ways. One, we were at 31%, we came down to 16 or 17%.
No. Sorry to cut you. My question was a bit different. So, I'm saying that we are around 18 to 20% in the +3 pool. But despite of we being such a high number, our PAR 30 to 90, that is stage 2 bucket, is relatively lower than the industry.
No,
So,
that's what
what
I'm
is the
saying. I'm answering your question only. Just
Okay, right.
hear out the complete thing. What's that? Just hear out. First, our +3 pool is not high. Do not look at it from a static basis. See the decrease that has happened. It has moved from 31% to 16%, while the industry has moved from 18% to 11%. Right? So that's one. The second thing is that even this 16% or 17% has been exposed to the new guardrails for the last 1 year, and these customers have not defaulted. So these customers, whatever was over leveraged and had to move into 90 plus, already moved 6-9 months back. Whatever is left now, and I have shared with you the collection efficiency. Overall, the collection efficiency is about 98.75 on the value perspective. On the old book, which is this leverage, where so 17% of the customers on the overall book. But if you look at the current book, which is more pertinent, we are about 12% on greater than 3 lenders. Those customers, the collection efficiency is about 98.3 to 98.35. So now whatever customers are left, even if they are greater than 3 lenders, they are used to operating in the new environment, and we are confident that there will be no more flow forwards. So does that address your question?
Yeah. It partly does. So, one more thing, like in that bucket, the 18 plus lender bucket, can you just share what will be the collection efficiency in that pool?
So I don't have that breakup. We don't measure number of lender-wise collection efficiency, but I can share with you in the old book, in the entire old book, where number of lenders is greater than 4, because this book we have not acquired. This book was acquired before August 24, right? Because post August 24 we changed the guardrails.
Yeah.
So that's what I'm sharing with you. Pre August 24, the entire book, the collection efficiency is 98.35, 98.3 to 98.35. So now whatever is left of this, it is behaving very properly, because these customers have realized whatever are left, that if they default like their predecessors, there will be no loans available to them from any of the financer. And that's why there's a huge behavior change on existing customers as well in terms of discipline. Yeah.
Okay. So overall, like in
The
that,
third
you
question.
don't see a high number of delinquency, right?
Yeah, absolutely. We should be confident that there is no more pain uh, in the book. On your third question was on the attrition and how you seeing that improving. So there's a lot of work we have done on attrition, including a lot of connect with front end teams, work on L&D, structuring the entire incentive structure. So just to share with you, the entire incentive structure, about 75-80% is based around collections and about 20% only on disbursement, which also encourages people to reject and push back cases which they think they will not be able to collect at the time of disbursement next month onwards. So the focus at the RO level is also, while our guardrails are tougher, so the disbursement approvals will come only for cases which are very good. But any concern that the RO or the front end guy sees at a customer level or the branch manager, they will reject that customer and not go ahead. About 18 to 20% of the rejection is done by the RO and the branch manager on the ground after we have approved the loan, because he doesn't think that on the ground situation the customer merits a loan. On the overall, hence, because of all this, the attrition, we measure attrition greater than 6 months. That has dropped by about 10 to 15% in this quarter as well, but that has dropped to sub 40% now. On your final question was around stage 2, that what is the stage 2 book and what is it as a percentage of the overall book, so that I will hand over to Aman to answer.
Stage 2 book in terms of value is 172 crores. As on 30th June, it is around 2.5% of our gross loan portfolio, EAD. So that in terms of value, I can give you the trajectory that it will be reduced in the coming quarter, because our slippage in the stage 2 as well as stage 3 is get reduced due to increasing collection efficiency. So on a numeric basis, that 172 figures of stage 2 will go down.
And what was it last quarter, Aman? If you
It
can.
is 172 crores, 2.5% of the book.
Quarter 4,
Quarter 4, I have to, 1 second, I have
some
to.
300 crores, 300 and.
Right now it is 383 crores, but in
No,
Q2,
stage 2. Stage 2.
stage 2 is 172 crores, sir, right now.
And what was it in quarter 4?
That I am checking, sir. 1 second.
Okay. So that if you can just share that also with Vatsal.
That I will tell in meanwhile in a meeting.
Yeah. So he will get a confidence that how's the trajectory on stage 2 coming down.
Right.
Yeah. Vatsal, do those answer all your queries?
Yeah. Yeah.
And Aman will just give you what was the stage 2 in quarter 4, so you'll get a
It
sense
is
of how the
256
reduction
crores,
is.
sir.
Huh?
256 crores.
So 256 crore has come down to about 170 crores.
Right.
Yeah. So Vatsal, in absolute terms, this will continue to keep drastically coming down
Right.
Got it.
as a percentage of the book also. Yeah.
Vatsal, your question has been done.
Yeah,
Akhilesh,
it is
there's
done.
a
Thank you.
question on the chat, which is what's your confidence at your end on the environment to grow? Is it realistic to have FY24 level monthly disbursement by end of FY26? OPEX as a percentage or normalized AUM? And what is our policy strategy around credit guarantee scheme? How much will we cover? When will we reach 10,000 crore of AUM and what will be our cost base? So, Akhilesh, I think some of these questions, I can't give you a direct answer, exact answer, but I'll give you a trend. So uh, there's a lot of positive sentiment on the ground in microfinance. And I'm not saying that everything is great, but we are getting the sense that things are getting positive. We will not let our guardrails go down. But the good news is that despite these guardrails, we are seeing traction on the disbursement month on month. And the sense is that somewhere around, like I explained to you, end of quarter 3 or beginning of quarter 4, we see the book, the inflection point in terms of the book getting positive. OPEX, in terms of when we will reach 10,000 crore, uh, I I don't know, but we are seeing significant growth, and the moment book starts getting positive, you will see the traction getting built on the AUM. Uh, OPEX as a percentage of AUM, while it is right now higher, but there's a purpose behind that. See, 85% of our OPEX is people, and we are very positive that we would eventually want to grow, and we are already seeing some positive green shoots, and we are seeing momentum on the disbursement already happening. So it is very unfair. It's the easiest thing to reduce people and reduce costs. But I think the call that we have taken as a company, that we don't want to do that, because when we get back into growth mode, then it is very unfair to go back to the market and then get people back. We think that it tarnishes the entire brand image of the company as well, and it is very unfair to the stakeholders, which are also the employees. So however, we have done is that there are some amount of people that we have deployed, and the way we have deployed them into collections. So you will see an upside of whatever, let's say, the OPEX reduction is, you will see additional income coming in. So rather than reducing OPEX, we are deploying those people to create an additional income stream, especially on the side of collections. On the credit guarantee scheme, we are getting ourselves registered. There are certain markets where we will apply for the credit guarantee scheme. I think about 10 to 15% of the market of our total fresh disbursements, because this is applicable to fresh disbursements. We will want to look at a credit guarantee scheme.
So we have Mr. Pratik Kuthari. Pratik, you can unmute yourself and ask the question.
Hi, sir. Thank you
Hi.
for the clarifications, quite detailed. Just actually, I missed the first 10 minutes. If you can just tell me the latest book value for our company. What is the current book value, sir, as of Q1?
So Pratik, as of Q1, we are 7,800 crores. Aman, is that the exact figure?
AUM is 7688, right?
7688. Okay.
No, sir, I meant the book value. So I think.
You mean what do you mean by book value when you say?
Sir, I think as of March, it was showing 101 rupees, the book value.
Okay, book value of the share
Correct.
per share.
Per share, correct.
Okay. Aman, do you have that figure?
Uh,
Aman or Ayush?
After the Q1, it would have gone down slightly, I believe. Or did it go up? Depending on the fundraise, etc. if any, that we finished?
Net worth we are having of 1943.
And number of shares is 16 crore.
So it is partly of share, right?
So 16 crore shares, but 16 crore are, so you have 3 crore partly paid also in that, Aman.
Right.
The way we should calculate book value is 10 crore plus 3 crore, which is completely paid, and that 3 crore we should exclude, which is partly paid. Is that right? So 13 crore as a base.
Do
and
I'm a
net
call.
worth of- yeah.
I'm in a call
Right.
right now.
30 crore is the base, 131 is our equity share capital, rest is our other equity, that is 1779.
Correct.
No. 1 second. Exact, I will tell you the new figure. Right. Equity base remains the same, 131.
So 1943.
1943 is the total equity, total equity value, no?
Right.
And number
And-
of shares outstanding, we should consider 13
That
crore.
is 131 is the, sir, number of capital value. 131 crore is the capital value. That is number of shares divided by that 13 crore number of shares, no?
Correct.
Partly paid up, right?
Yeah.
So 1943 by 13 crores, right? So that is about 149 per share is the book value.
Correct.
Okay, sir. Okay. Thank you, sir.
If you will consider fully paid up shares, right?
Yes,
Yeah,
sir.
yeah,
Yes.
correct.
Even if we were to consider the partly paid up into this, then I think it might lower it a little bit. But
That
then
much
again,
will go down.
that much will go
Correct.
down. But then again, our net
But
worth
let's
will
assume the
increase.
fully paid, it comes to this 150, what you are.
Right,
Yeah.
right, sir. And sir, what are our year-on-year, current loan book, and what is the expectation for growth this year and next year, if you have anything, along with expected NIMs?
We are having a growth of, as Sanjay told, that in last quarter, 950 crore disbursement. In the full quarter, we have done around 330 crore in a month. So right now, we are growing at a speed of around 6 to 8% incremental disbursement every month. Like July, we have disbursed around 400. Then we have increased to 8%, 6 to 8% around in August. Then in September also, we are seeing the same thing. So if you compare December, we are planning that we will get a break even, as we are having a rundown of around 580 crores in a month. So that we get, if we get the 580 or 600 disbursement in December, so it will get a break even. So from that way onwards, we will see the growth in AUM. So in a full year, we will see a downward trend as compared to previous year, but in coming years, that disbursement will grow on the same percentage. So next year onwards, we will see a increase in our loan book portfolio.
Right. So sir, just if you can.
I think the way you should calculate is, let's say, rundown of 570 crore, and let's say
Right.
average disbursement of till, let's say, Q3, let's say 450 or 500, and after that, let's say 600. So net the book will be still a little down. Let's assume somewhere around 7,500, 7,300 crores.
Okay.
And from there, the same rundown on the book, you can see, I can't give you an exact number, but I'm sharing with you the trajectory that we are looking at. From there, you keep on taking that trajectory, and we have shared the rundown. So the rundown will go down a little because you will have a significantly new book then.
Right.
And at least for the next year, then the book should grow more than 20% next year.
And this is net of rundowns, right?
Absolutely.
Right.
And what is the NIM trajectory we are looking at this year, next year?
I think NIM should remain more or less flat at the same level. We not put together the entire impact of borrowing cost or the interest rate at the client level. But I think NIMs will be maybe 0.25 here and there.
Right. So for full year, I think what was it last year? Sorry, I don't have it in front of me.
So we were at 10 point, we currently at about 10.25 plus minus, I think 25 bips we will be
Right.
at.
So for the current year also, right? 10% plus minus.
Last year we were a little higher, I think, but this year will be about 10.25 to 10.5. Initially we started with a little higher, but then there were some reversals that we did. I think Q4, because of which Q3 got impacted. But on a stable basis, this is the level at which we will be at.
Right. So net NIM is at 10% and gross NPAs are
10 and
looking
a
at
half.
around 10.5 and gross NPAs we are looking at about 5.5, right? To close the
So
year.
last year,
Full year we are around 10.21%, right?
Acha.
last year we had gone to 11 and a half, but in Q4 we had come down to 8.6. So roughly you can assume that same. Last year average was 10.25. So same Q1 average is very similar.
Okay, sir. Understood. Thank you so much.
Due to time constraint, this is the last question. I would like to thank the management of Fusion Factor Finance and also all the participants for sparing their time. Now, any closing comments, sir?
Yeah, so thank you everybody for being here patiently listening to us. Most of the things we have tried to share with you in a very transparent manner. I think we are seeing, and we have repeatedly in our questions and all interactions, we have shared that we are seeing positive traction on the ground. Do we call it recovery yet? We don't know right now. We would want to wait at least for another quarter before we call it recovery. But yes, we are all the things that we are doing month on month, we are seeing serious traction in a positive way, both in MFI and MSME is a very small portfolio that way. And any queries that we have been unable to address, we'll be very happy to take a mail and address. But we are seeing positive sentiments and traction on the ground. And I think on top of that, we see that GST will have a very positive impact for our customers from an overall perspective.
Thank you very much, sir.
Yeah,
We may
thanks.
close the call, sir.
Yes. See you.
Recording stopped.